All right, welcome to this explainer. Now, if you glance at your calendar, you're going to see that today is June 29th, 2026. And why does that exact date matter? Well, because the absolute unforgiving filing deadline for literally one of the biggest international tax shakeups in recent history is exactly 24 hours away. We're talking about the global minimum tax, specifically Pillar 2, and this frankly shocking regulatory collision between the OECD and North Macedonia's Public Revenue Office, or the UJP. The compliance countdown is at its absolute limit, and the pressure on multinational companies right now is just staggering. So we're going to break down exactly what this all means, who's affected, and what you absolutely need to do by tomorrow, straight from the official documents. Now, what's really interesting about this slide is this tiny, almost hidden little footnote, footnote 3, from the OECD's recent Common Understanding document. It literally changes everything. Let me give you some quick context. The OECD realized that the global portals to file the new Globe Information Returns, or the GIR, well, they just weren't ready. So they created a centralized safety net. 33 jurisdictions agreed to this transitional relief, meaning, basically, if you file centrally in a ready country, you get a waiver from local filing penalties. It was a massive sigh of relief for the corporate world. But then we get to this footnote. It acts like a deep water bomb. North Macedonia flat out refused to join this consensus. They completely blew up that centralized safety net for any multinational operating within their borders. And this brilliantly illustrates an immediate massive conflict. On one side, you've got the OECD's leniency, right? It's a desperate attempt to prevent absolute compliance panic by allowing centralized filing and penalty waivers. But on the other side, you have North Macedonia's absolute strictness. They literally do not care if you filed in Australia, France, or Germany. They are demanding hard compliance directly to their local authorities with absolutely zero grace period. It's a massive defiant move against the global grain. Section 1. Who is in the crosshairs? Let's transition directly into identifying the specific targets caught in the middle of this really aggressive local tax enforcement. So here's the magic number: 750 million euros in annual consolidated revenue. That's roughly 8.5 billion US dollars, to put it into perspective. According to the UJP's June 24th announcement, if a multinational enterprise, and hey, this is a really crucial detail, a large domestic group based in North Macedonia, hits this threshold, they are officially in scope. But it's not just a one-off spike in revenue, okay? You have to meet this massive threshold in at least 2 of the 4 fiscal years between 2020 and 2023. If you fit that profile, you are directly in the firing line. And if your revenue does hit that target, you are fully locked into testing for this rate right here, the 15% minimum effective tax rate. The days of shifting profits around to magically drop your effective rate to single digits, yeah, those are over. If your calculated effective tax rate dips even a fraction of a percent below 15, North Macedonia is stepping right in to claim the difference. Section 2. The 3 tax weapons. Okay, let's dive into this and see exactly how the UJP plans to ruthlessly enforce this 15% rate through cascading rules. Weapon number 1 is the QDMTT, or the Qualified Domestic Minimum Top-Up Tax. Think of this as the first totally unavoidable wall in North Macedonia's tax fortress. It ensures that if an entity's effective tax rate falls below 15%, the top-up tax is paid directly to North Macedonia before any other country can even get their hands on it. They want that tax difference kept locally, period. Now, if the QDMTT doesn't completely cover the shortfall, a secondary weapon activates. This is the IIR, or Income Inclusion Rule. Basically, this forces the parent company of the multinational or large domestic group to step up, calculate, and pay the extra income tax required to bring those low-taxed member entities right back up to the 15% mark. So, the crucial point is how this third weapon seals the deal. The UTPR, or Undertaxed Profits Rule, is the ultimate safety net. If for some reason the IIR doesn't catch the remaining tax deficit, the UTPR forces local member entities to just pay their calculated share of the extra taxes. Together, the QDMTT, the IIR, and the UTPR create an absolutely inescapable regulatory web. Section 3. The ticking clock deadlines. Let's talk about the extreme urgency here, given that the absolute deadline literally starts tomorrow. Just look at how aggressive this unforgiving double-line timeline is. Tomorrow, June 30th, 2026, you absolutely must submit your local entity notifications and file the massive 2024 Globe Information Return. Missing this date triggers immediate noncompliance. Then, a mere 30 days later, on July 30th, you have to file the top-up tax return and actually pay the QDMTT. Finally, by August 30th, you got to pay the supplementary income tax. Missing a single date in this rapid-fire sequence? Yeah, that triggers some severe consequences. Section 4. Filing Logistics and Pitfalls. Let's move to and see how this builds into a shockingly retro and complex mechanical process for filing. All right, here is what you actually have to execute by tomorrow. Step 1. You must physically download a specific notification form, fill it out, scan it, and email it to contact_center@ujp.gov.mk. Yes, you heard me right, an emailed scan for a multi-billion-dollar tax mandate. Then, step 2. You pivot entirely and must e-file the massive 2024 GIR through their portal, which absolutely requires advanced authorized digital certificates. And step 3, e-file the specific QMDT return through the e-tax system. It's this bizarre administrative marathon mixing old-school paperwork and high-tech digital signatures that leaves a huge, huge room for user error. And right smack in the middle of that marathon is a massive snare. I have to warn you directly, don't fall into the trap of assuming a zero balance or an overseas centralized filing saves you here. Under North Macedonian rules, even if your calculated top-up tax is a flat zero, you still have a mandatory, absolute obligation to file the returns locally. Ignoring it just because you think you don't owe anything, that's a guaranteed way to trigger an audit and heavy penalties. Now, if you successfully navigate the filings, you reach the payment stage in July and August, where absolute precision is paramount. Calculating millions in tax correctly but then wiring it to the wrong hyper-specific code, that is a fatal error. The routing details are absolutely critical here. The municipality account ends in 01877. But more importantly, the QDMTT must go specifically to code 711236, while the supplementary tax has to be routed to 711237. Literally one wrong digit and your millions are lost in the ether, and the UJP is going to consider you delinquent. All of this intense strictness brings up a very practical, systemic question, doesn't it? When every single in-scope multinational tries to push massive, digitally signed GIR files through the UJP portal by tomorrow's deadline, is North Macedonia's system actually going to survive the data crash? Section 5. Unknown Risks Ahead. Let's get into the final set of critical blind spots that even the authorities haven't fully addressed yet. We are essentially flying blind in 3 key areas right now. First up, black box penalties. The OECD warned that non-consensus jurisdictions might enforce their own unknown, strict local penalties. So we still really don't know the full financial hit for being just a single day late. Second, portal capacity. Remember, the whole reason the OECD granted waivers was precisely because country portals weren't ready. North Macedonia is taking a massive technical gamble, assuming their servers won't just melt down tomorrow. And third, complex bilateral exclusions. Countries like Poland and Slovakia have these complex exclusion rules that make this global web of reporting an absolute nightmare to untangle perfectly by tomorrow. So because a total system failure is honestly highly likely under tomorrow's pressure, you are going to need these lifelines handy. The emergency contact email is info@ujp.gov.mk. Keep their landline hotline 0800-330-000 and their mobile number 023-325300 literally on speed dial. If the portal crashes right when you're trying to upload your digital signature, you absolutely need a documented paper trail proving you tried to contact them before the clock ran out. The OECD really tried to build a centralized safety net, but North Macedonia just cut the ropes. The 24-hour countdown has officially begun. The rules are unforgiving, the technical systems are untested, and there is absolutely no room for error. So as we wrap up this explainer, I have to leave you with this. Is your Globe data ready to upload right now, or are you about to be caught in tomorrow's compliance trap? Get your scanned forms and digital certificates in order, folks, because the UJP is waiting. Thanks so much for joining me to figure this all out, and hey, good luck out there!